Welcome to the Commercial Real Estate Podcast, powered by First National. I am Adam Pawatic, sitting here with Rolly from Informa. You might be used to hearing me introduce Aaron at this portion of the podcast, but he unfortunately could not make it out to the 30th Vancouver Real Estate Forum, where we're sitting right now with an unbelievable view of the mountains, which translates very well for an audio medium like a podcast. But I want to thank Rolly for stepping in as an emergency co-host. It's
my pleasure. I'll try and do it justice.
Yeah. But our guest is Ryan Berlin. He's the Director of Intelligence and Senior Economist at rennie. Ryan, welcome.
Thanks for having me, guys. Yeah, appreciate it.
So we are, of course, at the Vancouver Real Estate Forum. So we've got a Vancouver data expert. Is that a fair assessment?
Sure.
Yeah?
Sure.
Okay.
Why not?
We can tack that onto your title as well. Make it even longer than it already is. So we are going to break up the conversation into two parts, because Ryan spends a lot of time digging through all the dark corners of the data world to figure out what's the ins and outs of the BC market, or I guess specifically Vancouver and the surrounding area over to Kelowna, I guess is the main focus.
Yep, we're in Kelowna.
Okay. So perfect. We're going to do the good news and the bad news. We're going to start off with the bad news in this market, and we'll leave everybody off on a positive note, because I don't want anybody listening too late at night and losing sleep because we ended off on something undesirable. So Ryan, before we jump into that though, can you give us the kind of summary of how you got into real estate, how you got to where you are, what spurred your delight in the data world?
Oh yeah, sure. So my journey started 20 years ago, and graduated with a bachelor's degree in economics, and thought, well, what the hell am I going to do with that? So I went back to school to push off making a real decision about what I was going to do in life. I got a master's degree, finished that, and said, what the hell am I going to do now? And I thought, well, am I going to be an economist? I didn't feel ready for that. But I ended up just getting into I joined a small consulting shop here in Vancouver called Urban Futures with David Baxter and Andrew Ramlow.
Consulting being like research?
Sorry, yeah, we were like demographic, economic, housing related research. So we did a lot of forecasting for the public sector. We did work for a lot of local municipalities, regional governments, crown corps, that kind of thing. But then also for the private sector, anywhere that population really plays a role in a market for something. And that's pretty much everything, everywhere. So we did work for companies in fast food, obviously real estate, transportation. So it was a very interesting, varied experience there. Dave retired, I don't know when, the mid 2000s, and Andy and I partnered up and ran the company for 10, 15 years. And then we had worked with Rennie and Bob Rennie and Chris Rennie for years leading up to us actually joining the company. And at that time, Chris Rennie's idea was like, we need to continue to evolve as a company if we want to stay relevant and we want to be a sustainable organization. And in his mind, what that meant was bringing in-house some things that most, I'd say, traditional real estate houses didn't have. And so he brought in a technology group, a tech team, and started up an intelligence function, a research function. And that's what Andy and I left Urban Futures for. We shuttered that. We moved over. And we've grown. Now the intelligence function has grown within rennie. And for the people that are listening, rennie we operate in the multifamily residential space. We have a pre-sale business, so we market and sell homes for developers throughout this region. We also have a brokerage, so we have about 250 realtors that operate in traditional resale. And so we support them with data and research and insights into the market. And so I just spend all day. We're a team of 6, and we just spend all day looking at numbers.
I can see your passion in it. I don't know that it clicks with me, but I'm glad you have that passion.
Yes.
So then, ultimately, the data that you're compiling into, investment thesis or market intel, is it the brokerage then takes that information and uses it, or does it end up in the hands of the clients at the end of the day?
Well, listen, yeah, part of it is used in-house from a strategic and planning perspective, but I think there are so many I mean, listen, whether it's real estate or it's anything else, we are not suffering from a dearth of data and information. It's really how do you synthesize the information that's coming your way, the data points that are coming your way, make sense of it so that you can understand objectively and really what's going on in your world around you. So within real estate, there's numbers flying around every day. The newspapers are filled with stories about real estate, and it'll make your head spin. And I think what we really try to do is serve as a consistent voice, offering a sober, objective perspective on what we see going on in the market. And believe me, I know I understand who pays my bills. I work for Rennie. I work for a sales and marketing company. But within Intel, we run our own little business there, right? We tell, we don't sell. I can't sell. I'm a terrible salesperson. So really, I have the freedom, my team has the freedom to really delve into the data and try to understand what's going on, whether that is telling a good news story about the market, or it's saying, hey, things are really tough out there right now, or something's wrong. We need to fix it. Those are the kind of narratives that we pursue, but all of it sort of being predicated on what the data are suggesting to us.
So you talked about what's going right, what's going wrong. What's going wrong? What's the tough part of this right now?
Well, I mean, so this is, when people say, how's the market? You've got to ask, I've got to ask, who's asking, or who are you to ask? Are you a buyer? Are you a seller? Are you a builder, developer? Because, I think that there's always a group that is benefiting from the conditions, and then there's always a group that is challenged by them. Whether sales are up, prices are up. Obviously, if you own a home, right, or you're selling homes, that's tremendous. But in an environment where prices are falling, that's not a good situation for you. But for buyers, obviously, that's where they're going to look to make their move, all else being equal. So it's interesting right now. We're just in this really unique space, this non-traditional downturn, because everything, all the chaos that we're seeing in our world over the past year from an economic perspective really comes down to one thing, and it's inflation. Inflation is driving all of the uncertainty and some of the material changes that we're seeing in our economy and our housing market. We care about inflation because the Bank of Canada cares about inflation, and they're the ones that control interest rates, or an interest rate. And so this persistently high inflation that we've seen, obviously for households, I think all of us probably realize, you may not be tracking it dollar to dollar, but you kind of realize when you leave the grocery store, I walk out with 3 bags and I just spent $200, and I'm going what did I just buy here, right? So it feels like things are getting more expensive, and it is squeezing budgets. There's no doubt about it. But then more broadly, the interest rate response by the Bank of Canada has been so significant, essentially unprecedented in terms of the magnitude and the pace of these rate hikes recently, that it has created a tremendous amount of uncertainty for everybody in the housing market, right? So if you're a buyer right now, you are facing very, very high mortgage rates, borrowing rates. And you don't know, should I be locking into a 2-year or a 5-year? When are rates going to come down? Is this the new normal? You have some owners right now with variable rate mortgages who, because of the increased interest rates, have surpassed their so-called trigger rate, right? So now their payments, they might be, the entire mortgage payment in a month might be going to interest, and they may not even be covering all the interest. And in some cases, some banks actually allow you to roll some of that interest that you haven't paid back into the principal. So then you have what is called a negatively amortizing mortgage, right, with an infinite amortization period. And what happens is those buyers are not paying down their principal. They're actually adding to it. But then when they come to renew, they have to snap back to the amortization schedule laid out in their contract, which means they have a higher outstanding balance, most likely, and they have to fit it all back in within however many years are remaining on their mortgage contract. That's leading to a lot of pain. So you have some owners right now who are struggling to make payments. You have buyers that are facing much higher interest rates, and prices have come down, not that much, honestly, and certainly not enough to create more affordable housing. So payments right now, this combination of interest rate hikes and price declines, the magnitude of the increase and the decrease in rates and prices has led to higher monthly payments, not lower, right? So even though prices would need to come down 3 times what they have for it to actually be more, quote unquote, I'm doing air quotes, affordable.
It doesn't, yeah, just like the view here does not translate to an audio medium, but there is, of course, a video component too. But that is one of the weird disconnects. I spend time on Twitter, which can be, entertaining, but also a pretty negative place. And you see a lot of people just pumping their fist that housing is going to come down. Are you a cash buyer? Because if not, your purchasing power is being eroded every time interest rates go up. It seems such a simple concept that some of these people celebrating are not really grasping.
Yeah, absolutely. Yeah, I mean, at the end of the day, the sticker price for the home might be coming down, and maybe that is. I mean, I would be the first to say that through the sort of middle part and through the let's say, from about 4 months to 6 months into the pandemic up until last year, prices were rising at an unsustainable rate. Home prices. I mean, it was absurd because everybody was making a move for some kind of reason. One, borrowing rates were absurdly low. But people were also, this chase for space was on, right? So people were making moves that maybe they wouldn't have otherwise made because they were looking at the world and it had changed and they were like, I need more space. This is my home now is a place that I live, work, and play. So it's got to be something different from what I've got. And everyone made the same decision at the same time kind of thing, right? So we had this run up in prices. So prices did have to come down. They did because they were already in this market very expensive. They were very high and they got higher. But I don't think there's a lot of purchasing power in this market. People, so 2 out of 5 homeowners in this region don't have a mortgage. That's a number
stunning with the multi-million-dollar price tag on so many of the homes here.
Well, absolutely, right? And some of it is a function of having purchased 40 years ago, maybe on the west side of Vancouver for $200,000 and the home's worth $4 million now, sure. And then there's other places where maybe it's a $500,000 condo that's been paid off. It's a downsizer that lives in it. But there's a tremendous amount of mortgage-free equity in this market and purchasing power that's already here. The economy is pretty dynamic. The labor force has been growing. Wages have been growing.
But maybe can we break it down by stratify by either dollar value or housing type? Are mansions that are going for $6 million here impacted more by this, or small condos that trade for the $500K you quoted?
Well, listen, this is the thing. I mean, there's some very expensive properties that get a lot of attention here. And
it makes national news every time there's some crazy Vancouver sale.
Yeah, of course. It's like, we're stopping and staring essentially and going like, who can afford that? Or like, where does that value come from? And the vast majority of homes are priced at valued at under $1.5 million. And I know $1.5 million is a lot of money, but the transactions in the space of, $2, $3, $5, $10 million is a very, very small fraction of the market. And there's a lot of demand for homes that are priced between $750,000 and $1.5 million. That's where almost everybody transacts. It puts a lot of pressure on that part of the market, and we have a growing population. Record immigration, a lot of that disproportionately filters into the country's metro areas, so Toronto, Vancouver, outsized recipients of incomers, and we need them. The reason we have these higher immigration targets is that we have an aging population and our labor force is growing at a tremendously slow rate. And without them, our population would decline in 10 years. So there's an economic impetus to increasing immigration. So people are wondering, why are we doing this? That's why. But now we need to marry that policy, that economic policy and immigration policy, with a housing policy, because we are not adding enough homes to accommodate the growing population, but also the changes that are occurring within it.
So geographically speaking, I know you focus mainly BC. In Ontario, we have all these ads about, come to Alberta kind of thing, because people are being priced out of the market further and further out. Obviously, that's happening here as well. Do you guys have that dynamic where people are jumping the mountains to Alberta? Also, I guess, where are they going to find the sweet price points here in Greater Vancouver area?
For sure, yeah. There's a lot of churn in this market. Not everybody is coming here. We do see a lot of we've called them equity refugees in the past, people who are taking their money to other markets where the homes are a lot lower priced. Victoria, although prices have come up there quite a bit in the last few years, but the island more generally, Vancouver Island. Kelowna is another market that has, do I want to say benefited from high prices in this region? I don't know if that's the right word, but definitely felt an impact of them for sure, vis-a-vis people purchasing home, moving up there. And also I should say it's not just on the ownership side. I mean, rents are very, very high and have been increasing. At least in the front half of last year, we're increasing at an unsustainable rate. We have a vacancy rate in our purpose-built rental stock in this region that is sub 1%, and it's always hovered around 1%. The depths of the pandemic. So in 2020, it spiked to 2.2%, and sure enough, 2 years later, it was back down under 1%. And we just haven't been, for years, we neglected to add to our rental stock, our purpose-built stock, and really the only rentals that were available were via the secondary market, so the individual investors. And I know a lot of people, sort of want to beat them back and say you shouldn't be participating. We want to own a home, and that's fair. But I think if we didn't have that secondary rental market, then we wouldn't have seen 80% of the growth in the rental stock that we saw over the past 10 years.
We'd have a bigger crisis now.
Well, we would. We are now starting to see purpose-built rental additions really move up. We had a record last year, and that's the direction we need to go in, but we have to do that for a really long time to catch up.
Yeah, I mean, just the logistics of trying to catch up is staggering. You would need such an infusion of capital. You would need government cooperation.
Yeah, and you know what you need? You need person power. You need the labor. You need the trades. You need the people to build these things. And this is where there's almost this catch-22, right? So we do not have. So the construction industry in BC has the second highest job vacancy rate next to healthcare among all sectors in this province. So the industry wants people, can't find people. So at a time when we have this historically high job vacancy rate in construction, we also need to build more homes than ever. And the number of homes we need to build in BC and in Metro Vancouver and other urban markets over the coming 3 to 5 years, each year would be more than we've ever built in any year. Right, so this is the government the provincial government has announced a number of measures that they hope will stimulate supply, both on the rental side, the non-market, within single-family neighborhoods, and I think it's all, the spirit is right. Like, we just need to be doing. There is no silver bullet for any of this, right? So it's about a lot of policies aimed to either close loopholes, like with the foreign buyer ban, or at the margin, encourage new supply.
Affordability is a hot topic. We did sit through the Western Canada Department of Investment Conference yesterday, and as Rolly highlighted, that affordability, you could rename it maybe the Affordability Conference, and might be apt. We asked Scott Butler yesterday where he thought rents would be 1 year from now. Where do you think rents will be in rent on the sorry, let me restate that. Where do you think rents would be on purpose-built rental 1 year from now?
And we're going to play it back 1 year from now.
Yeah, great. Oh, super, yeah.
And we're talking top of market, the newly built, the amenity-rich, everything you can do to squeeze that number higher. Where do you think it's going to be?
Okay, so there's this phrase that I use often, that economic forecasting was invented to make astrology look respectable. Because especially when it comes to prices being, for the price of anything being, conceptually the intersection of a bunch of demand side factors and a bunch of supply side factors. Who the hell knows, right? You can do what I do all day, and it can be within the context of the housing market or commodities or financial markets, and you're going to get it wrong. So with that being said, I think what we've seen I'll speak to the downtown Vancouver market, because that's where we're seeing some of the higher end, more amenity-rich, purpose-built rentals come to market more recently.
Fair.
And we are seeing per square foot rental rates creep into the sixes. So like, call it $6 a square foot, right? And that's plus or minus. The buildings aren't blending at that. maybe close to that. But you will also have units within those buildings that are renting for much more than that. There is a point where the market, like the size of the market in terms of people that can actually reasonably afford that, is pretty small. And we do have a growing tech sector here. We have a lot of office space that's coming and higher paying jobs that are coming. So there is more space in the market for homes at those price points and with those amenities, with all that stuff. But I think we're going to see a flatlining. I really do. I don't think we'll see a dip in rents again because we're just so supply challenged. But I think the increases that we saw in the front half of last year already started to slow down in the second half, and I think that's continued into this year. So I'm not giving you a number. I think I think that rents will be percentage points above where they are now, like single-digit percentage points above where they are now. I just don't see a lot of movement right now.
The overall is more upper pressure than there is down, but
definitely.
Yeah. And of course, at some point, when your rent gets into those stratospheric levels, you are just competing with home ownership at some point.
At some point, yeah. And I realize I'm talking rent per square foot, and that's not how people think. The average person isn't looking at their license saying, how much a month does this place cost me to rent? And you're right. At some point, you go, well, but hold on a minute. If I'm paying that all in rent to you, I can go buy a condo in Surrey, and at least a third of that in this interest rate environment is going to go to my principal. So that consideration is very real as well, for sure, as rents generally increase.
Before we move on to the good news, is there any other risk factors on your radar now that you're seeing in the data?
Yeah, I think the risk factors largely are global in nature. So again, going back to this concept of inflation sort of being the origin of all that ails us in some ways. I look at it and say, well, what could, like our forecast for inflation, I guess I'm getting into the good news here, but
we'll transition.
Yeah, we have a fairly positive outlook for inflation. In other words, that it will come down into the bank's target range within the next few months. So, but when I say that, it's with the caveat that anything can happen. Like on Sunday, OPEC made a surprise production cut.
Barrel cut.
Right. So, you can't predict that stuff. So there's a lot of things like, are we going to experience, is there sort of like a COVID 23 that's on the horizon? I don't know.
But back to the bad news.
I know. So we're closing the door on the bad news before we transition here. But just talking about risk factors, there are some unknowns, right? Like, what is the path for the war in Ukraine? And where do energy prices end up? We don't know. Will other conflicts bubble up that might disrupt supply chains and disrupt the market for energy, that might lead to sustained higher inflation and therefore interest rates that stay higher for longer, make everything more expensive, and keep our housing market sort of in a trench? That could happen, no doubt. The good news is I think that the inertia as it relates to inflation is downward. We saw almost no month-to-month inflation in the last 6 months of last year and into the first 2 months of this year. And that's why the annual inflation rate dropped from 8.1% in June of last year to 5.2% last month. And we think it's going to be low fours the next day.
So when you say target range, you mean like the 2% kind of target?
Yeah, I mean the one. Yeah, exactly. The 2%. Okay. Yeah, like 1 to 3% is the range the Bank of Canada works within. 2 is the goal, for no good reason, I should say. Really. But that is where we are headed, unless something happens that we really can't predict. So that's good news for households. For all of us, anybody who is spending money on anything. The inflationary pressure is less and will continue to be less. The pressure on interest rates will abate. The Bank of Canada's interest rate is higher than it wants it to be. They will bring it down. We think that they might actually cut more than once in the latter half of this year. And as that happens, then we get back into, there's a bit more confidence in general for households and the markets for different things, including housing, and people then are willing to make big investment decisions, like buying a home. If you don't know where if you think mortgage rates are going to go up for years to come, you're probably not going to be super eager to jump into the housing market, right? But if you have a sense that like, I feel like inflation's under control, I feel like interest rates are either stable or they might come down, that gives you a lot more confidence to both on as a buyer and also as a seller, a developer, to make big decisions. So that's, I see we were a year into this downturn. I think prices, like in multifamily in this region, will come back to their previous peak, which was in early 2022, by early 2024. So it's probably a 2-year cycle that we're looking at right now.
Not to get too far off the path of real estate, but you are an economist, so I want to ask this question. You seemed to dismiss the 2% goal. I'm sure you've heard the argument that, why not 4%? So what is your view on the price we're paying to get to that 2% goal versus maybe adjusting it upwards?
Exactly. That's a really, really well put question, because there's a very real cost to potentially to higher interest rates. And that is a deteriorating labor market. And when I say that as an economist, it doesn't sound like anything. But what that means is that people who have families and own homes will lose their jobs, and the means to put dinner on the table or to live in the home they live in, and for their kids to go to the school that they go to. And it means they'll have to move, or they'll have to change something fundamental. So I think, in a perfect world, what we see is this so-called soft landing, where we all sort of weather these higher interest rates. We spend less, but we don't see a significant decline in employment. But we see, because we have a high, like a record high, almost record high now, number of job vacancies, that can serve as a bit of a shock absorber. So in other words, with interest rates being so high, companies don't lay people off, they just stop hiring net new, right? So that's kind of what we're seeing right now, because the unemployment rate is still low. But it remains to be seen where that goes. Back to your question, the 2% goal is something that was adopted by countries around the world, because I can't remember which country. It might have been like New Zealand or something like that first adopted it. But the goal essentially is like low and stable price inflation. That's the goal, right? There's no empirical evidence that 2% provides any kind of material benefits to the economy or households or anybody versus 3% or 4%. Obviously, if inflation is like 50%, if you have hyperinflation, it's very easy to see why that is not an ideal situation. But we're talking 2 to 4%. I think the jury is really, really out on that one. I think it's like you'd be hard pressed to find somebody who could really strongly defend the 2% goal from a it's better for society perspective.
4 is a disaster, but 2 is the promised land.
Yeah, exactly. But the issue, though, right now is that the Bank of Canada hasn't budged. The Bank of Canada and central banks around the world, they've staked their reputations on getting back to 2%. So they're not about to go, why don't we just call it a day at 4?
We're
that
done.
could be next month.
So this might be going into the weeds a bit too much on this, but when we keep hearing about deglobalization, and at a lot of these conferences that we have across the country, there's discussion of onshoring, reshoring, getting away from these low cost structure manufacturing environments. So that means higher real estate costs, higher wage costs. How does that then impact inflation? I mean, if you're throwing all these additional costs into our manufacturing processes, and then, I mean, if you're talking about a high interest rate environment where companies, and we know looking at the Bank of Canada outlook surveys and what have you, the hiring intentions are, a little weak. So how do we get to that point of 2%, let alone 3% inflation when the cost of production is going up?
So I would say that unsecure supply chains are also inflationary, right? We've lived that now, right? So we just pursued this this implicit policy of globalizing, just essentially moving production to the lowest cost jurisdiction everywhere. Everybody's doing it, and it makes a lot of sense from a dollars and cents perspective. You can textbook economics will tell you that this is everybody's better off, right? But that's not true. And I think what we're realizing is that there are non-economic reasons to onshore, to limit, or there are economic reasons to decentralize production, like Apple. They've moved production to higher cost jurisdictions throughout Asia, multiple different countries. right? So they are fragmenting their production so that a breakout of something like COVID doesn't shut down the entire supply line of iPhones, right? So I think your point is a good one. I do think it's inflationary. I think you would see more steady pressure on prices through a process of ongoing onshoring or reshoring, than you would if we have another situation where we're so reliant on a few different producers and then that source of production is cut off. Like then we see these dramatic changes that are tough to deal with.
And it comes back to, I guess, the certainty. At least your production is not going to get cut off. Whereas in COVID, all of a sudden, it's gone.
Yeah, I think people now value that. It's not. It's still really for companies, it's still profit maximization, but there are some additional variables that they're including now that I don't think they included in their calculus previously.
It's not just purely the lowest cost provider. There's the outside risk that you have a total loss for a period of time. And
who would have thought that would have ever been the case, right? I mean, it's just, I think like our supply chains are more frail than we thought they were. We just kind of got used to going on Amazon in the morning, ordering something, and it shows up in the afternoon, right? It was too easy. So, I think the world will be a little bit different in that way going forward.
Let's talk about foreign buyers. We are, of course, sitting in Vancouver, the country that makes headlines every time the conversation of foreign buyers comes up. You said you've looked into the data, and I guess there's a discrepancy between what you're seeing and maybe what gets reported broadly.
Yeah, I mean, listen, if I'm not seeing something in the data, I'm not that willing to jump to alternative conclusions as to maybe what is going on, because it could be anything. There's been some research into money laundering and what sectors of the economy it's coming through in BC. So it's very, very difficult to pin that stuff down. So the estimates that were made had a standard error that were almost equivalent to the estimate. So it could have been like double, it could have been nothing, but it's a best guess, and that's fair. It's not to poo-poo the research. It's just to say it's really, really hard to tell.
Well, you're tracking something that's designed to be opaque.
Exactly. Exactly. And so the data we have some sources of data on foreign buyers. So here in BC, we've had a foreign buyer tax, like in Ontario, since 2016. They've expanded it geographically. They ramped it up from initially it was 15% of the value of a home in Metro Van. Now it's 20%. And that group of foreign buyers is more broadly defined than the group of foreign buyers, same term, but different group of people that are caught under this foreign buyer ban. The foreign buyer ban really is targeting people who don't have a connection to Canada. They're not here. They're not earning money here. Like, they're not occupying the home. The foreign buyer tax in BC captures people who are here on work permits. Right, so you're here. You could be you're earning an income. You're paying tax, and you got to pay a 20% tax on the home that you purchase, right? And you may eventually become a PR. And there's a period. There's a bit of a give and take there. If you do become a PR, that there's some concessions there, but it
makes
is
that path a lot harder, though. Even if the concessions come
for sure.
later.
Yeah,
absolutely, absolutely. And so anyway, I'm saying all of that because this broader definition of foreign buyers in BC, we do have data on them, and in Metro Vancouver, for years, it's been less than 2%. Right up until the middle of last year, when the bill in the House of Commons received royal assent to ban foreigners as of January 1st of this year, they opened up a 6-month window for people to take action. So we actually did see an increase in the share of homes in Metro Vancouver that were purchased by foreign buyers. It went from 0.9% to, I think, 2.1 or 2.2%.
I mean, it's a dramatic increase in a percentage basis.
That's right.
Yeah.
But overall, you're saying that you're saying 98 out of 100 homes don't have foreign transactions of homes don't have foreign involvement.
Even with that surge, it'd be hard to pinpoint it moved the price in a meaningful way.
Yeah, and they also the Ministry of Finance who collects and then shares that information publicly on foreign buyers also presents a whole bunch of other information on foreign buyers and not. One of the things they include is the average purchase price for those foreign buyer transactions. It's not very different from the average purchase price of everybody else. So that is not to say that there aren't pockets of this region, neighborhoods, that are defined by certain home types at certain price points. So talk expensive detached homes. Where you have that, or where you have expensive new condos, so in pockets of downtown, sure, you're going to see a higher, it's not 2% everywhere or 0.9% as of the middle of last year everywhere. It's certainly higher in places, but then it's also lower in a lot of places. So it's really, really tough for me to see how, I think, sure, federal government closed the loophole, and I get it. You want homes in Canada for people that are living here, contributing, all that stuff. So I'm not somebody who's going to say we absolutely shouldn't have done it, but I also am under no illusion that I don't see it having a big impact.
And we've talked to a few other people, and at the Western Canadian Apartment Investment Conference, it came up where the foreign buyers are more impacting on the development side than the resale side, and removing them from the picture is actually detrimental to development.
Yeah, I mean, we actually don't. So, yeah, there's certain financing thresholds that developers need to meet as they go through the marketing process and the sales process before they start, so they can get their financing, they can actually start construction. Typically, banks don't actually, in most cases, this certainly wouldn't be all cases, but in most cases, my understanding is that banks don't count foreign deposits, buyers, in those pre-sale projects. They don't let them count towards whatever that threshold is that you need to sell, 60%, have 60% of the space by X date. It's sort of yeah, sure, collect the deposit, get the name on a contract, but you still need to sell another home if you want to progress towards accessing the cash needed to build. So, and as a company who sells a lot of pre-sale homes in this region, we've got dozens of projects where we work with a couple dozen different developers at a given point in time, and we look at who is buying homes, and we don't see. We just don't. Again, this isn't to say it isn't happening at all, but we don't see it in our data. There's nothing like, if I look at where the origin of buyers is for in a particular project, I can say, well, 37% is Vancouver, 24% is Burnaby, 6% is Calgary. We have this information, and the outside of Canada group, for example, is minuscule. It might be 1 out of 100 homes, if that. So from that side of things in new development, I'm not seeing it. I'm really not. And believe me, I would be the first person. I'm watching the data all the time. If that changes, it changes, objectively changes, and then we talk about it.
So Ryan, I mean, you're obviously in the data all day, every day, and you're in the forecasting business. So what is your outlook for Greater Vancouver, for BC, over the next 2-5 years?
Yeah, I mean, listen, every market goes through cycles. And as I said earlier in this recording, at any point in the cycle, you have sort of winners or losers, or people that are benefiting from the conditions and people that are challenged by it. So it's not to say that one set of conditions is objectively better than another, but you do get cycles of more sales, declining inventory. You have multiple offer scenarios, rising prices, a lack of availability, eroding affordability. And then on the other side, you might have expanded inventory, people wanting to sell more than people wanting to buy. You'll have list prices coming down, and then single offers after 60 days coming in under asking. So you do have this sort of like, there's this sort of oscillation around a trend. If we're talking about 5 years out, I feel good. Like, I can't tell you exactly, well, let me follow the cycle and we're going to be here. But if I look at the trajectory, the underlying fundamentals of this region, of strong population growth, we have a baby boomer generation that is very relevant in so many different ways, but we have a growing young population. There's so many people moving here. People who move are overwhelmingly young. Like the typical age for an immigrant is 28. And I don't know if everyone knows that, but they're young because they're coming here to work. They're coming here after finishing school, maybe starting a career, and then they bring all of that over here. So we have this like diverse, growing, relatively young population. It's a beautiful region. The province is a beautiful place with a lot of different types of markets and places to live. And I'm very positive. Like, employers want to be here. You see, I think we benefit from geopolitical turmoil in a way, whether it's in the U.S. or elsewhere, but particularly in the U.S., because people just sort of say, you know what, I'd rather. I mean, you have American companies that are increasingly, and in the tech space, that are coming to Vancouver in waves or growing in Vancouver. Last year, Canada grew by 1 million people. The U.S. grew by 1 million people, and they're 10x as big.
10x is the standard, right? Yeah.
So think about that. There's a lot of reasons for it, but I like how we're situated in a global context. This region, this province, in a Canadian context too. So I'm positive. There's some wrinkles to iron out between now and then, right? As it relates to things like inflation and interest rates, getting a bit more stability back, but we'll get there.
I'm glad you have a positive view, because I realized we were still in the good news portion of our. So if you'd gone really dark there, that would have been tough for our programming. So we are out of time, but I mean, it's been a great conversation. If anybody wants to look at some of the work that you publish, where do they go to get that?
Yeah, thanks. So they can go to our website, rennie.com. So it's rennie.com. We do have we promote pre-sale homes that we're selling on there. You can connect with realtors. You can search for properties through MLS on our website. But if you go to the intelligence page, so it's .com/intelligence, all of our reports are there. So we publish monthly reports on the resale market that I think are really, we write them to be consumable. We try to have some fun with it because the underlying material could be quite dry. But there's a lot of stuff in there for people in the resale market, in the pre-sale space, who are wondering about what all these economic goings on mean for housing. So we opine on that, provide perspectives on that stuff. So go there and you can sign up and you can choose what you want to receive to your inbox. Yeah, it's all there.
Okay, perfect. I want to thank First National for powering the podcast. I want to thank the Real Estate Forums for hosting us here at the 30th Annual Vancouver Real Estate Forum. I'm glad we're back here doing it in person. Thanks to Rolly for stepping up and guest hosting while Aaron's indisposed. It's much appreciated. And, of course, to our guest most of all, Ryan, thank you so much.
Thanks, guys. That was fun.
Thank you.